All right, I'm going to go ahead and get started. It's a pretty small group today. Certainly feel free to ask questions. You utilize the chat box for that. I have the chat box open here, so I will be able to see your questions as they come in. Welcome. My name is Patricia Dorn. I'm with the Maryland Insurance Administration, and today I'm going to be presenting to you Annuities 101, What is an Annuity? I'm with the Consumer Education and Advocacy Group of the Maryland Insurance Administration. And what we do is educate consumers about insurance products. And so this is a very informative presentation. However, I'm not going to be able to answer any specific questions about, perhaps like what annuity is right for you, or is this something that I should be purchasing? That's not going to be the kind of questions that I can answer as a regulator. However, I do hope that you get a lot of good information from this presentation, and go ahead and put those questions in the chat, and I'll try to answer them as quickly as possible after you post them. My email address is on the screen. I also put it in the chat. This is being recorded, and so if you want a copy of the recording, it'll be available on our website within a couple days. If at the end you decide that you want the PowerPoint presentation itself, send me an email and I'll get that to you when I log into work tomorrow morning. And so with that, I'm going to get started. This is Annuities 101. What is an annuity? Really quickly, I'm going to introduce our agency, the Maryland Insurance Administration. So who are we and what do we do? We're the state agency that regulates the business of insurance in Maryland. And that means that we're the entity that licenses the insurers and the insurance producers. And so insurance producer, those are your agents and your brokers. We're the entity that licenses them to do business in Maryland. And we make sure that they follow the laws. They have to follow Maryland's laws. We make sure that the insurance companies are solvent. And so it is our job to make sure that the insurance companies have enough money to pay your claims. We review the policies in our office, and we review insurance rates to make sure that they're not inadequate. So they have to be collecting enough money to be able to pay what they owe in the future. However, we also make sure that they are not excessive or unfairly discriminatory. And we investigate consumer and provider complaints and allegations of fraud. So we're the state entity that you can come to if you have a complaint against your insurance company. If you have a claim that's in progress and you're not happy with how it's being dealt with, you can come to us and file a complaint. You can also come to us with allegations of insurance fraud. And so let's just get started. What is an annuity? An annuity is a contract between you and an insurance company under which you make either a lump sum payment or a series of payments. And in exchange, that insurer agrees to make payments to you in the future. So sometimes with an annuity, it's a lump sum. It's one payment right up front, but very often it's going to be a series of payments. And on the left-hand side, there's a little copy. There's the front cover of our brochure, our annuities brochure, and feel free, you can download that from our website, or you can call us and request that it be snail mailed out to you as well. So again, what is an annuity? Real quick, back to this. So they agree to make payments to you in the future. And so the amount of this payment is determined according to the terms of the contract. So the contract that you've signed and agreed to, and the market environment, the financial market environment. It typically varies depending upon the amount of the original payment, the length of the investment, and then of course you may have withdrawals and there may be other factors as well. Although annuities are not life insurance, most do include death benefits. Annuities are frequently used as an investment tool. However, they may not be the best investment option for you. And they may not be the best investment option for you is kind of a theme that I'm going to reemphasize here and there throughout this presentation. You know, it's important to emphasize that annuities are complicated. They may not be the best option for you for several reasons, and you might need some help, somebody like a financial advisor or someone like that, to help you decide if the annuity that you're interested in does actually make sense for you. So an annuity can have a number of different features, requirements, and options. It can and it likely will. And the details can be difficult to understand, even for an experienced investor. And it's strongly recommended that you consult with a trusted advisor when you're considering an annuity. You can gain a better understanding of an annuity by knowing the answers to these questions. And so I'm going to go through a list of questions. So how does the annuity earn interest? Is it fixed or is it variable? How do you pay premiums into the annuity fund? When does this annuity start paying you? How does the annuity pay you? And what administrative fees or charges does the annuity have? And is there a surrender fee? It is last on this list, but not least, because some of these administrative fees can be substantial and the surrender fees can be substantial as well. So how does the annuity earn interest? Is it fixed or variable? So there's two basic types of annuities, fixed and variable. So two types, fixed and variable. In a fixed annuity, the insurance company guarantees that you will earn a minimum rate of interest during the time that your account is growing. That interest rate may fluctuate. So there is going to be a minimum rate of interest. So when I say the interest rate may fluctuate, it may fluctuate up and down, but then you have that base level that you have that minimum. Fixed annuities tend to be more conservative. So these annuities with this base tend to be more conservative. The guaranteed rate, so that base rate, it may be higher or lower than the interest rate you would earn in a bank savings account. So just be aware of that. An equity index or fixed index annuity is a variation of the fixed annuity. So in an indexed annuity, you choose how you want to invest your premiums. Your premiums can go into a fixed account or to an indexed account that you select that is offered by the contract. So more on how does the annuity earn interest? Is it fixed or variable? Let's talk a little bit about variable annuities. Variable annuities offer you the chance to earn greater returns, and returns are the profit on your investment. So yes, variable annuities do offer you a chance to earn greater returns, but they also have greater risk. So that's important to know. And they also require more active involvement from the contract holder. Active involvement means you need to make decisions on a regular basis about your investment, and sometimes that's annually. And so I think it's really important to be really honest with yourself about how active you want to be in a situation like this. If you're somebody who, you have an IRA or you have a 401k at work or your organization's equivalent of a 401k, you might have a really good sense already of how active you want to be in situations like this. If you chose your mutual funds when you started your job 12 years ago and you've never looked at them again since, then you might not be interested in something that involves active involvement. But if you're somebody who, you enjoy being involved in making those decisions, maybe you're somebody who watches Bloomberg News or CNBC at night or something like that, and it's interesting to you, then you might be somebody who would work well with a variable annuity, that requires some active involvement. So just be honest with yourself, assess your own situation about how how likely you are to like really want to actively be involved in your annuity. So these annuities are highly dependent on the performance of the stock market, and they generally make no guarantees about earnings. If the annuity fund performs poorly, you could lose some or all of your original investment. For example, if you own a variable annuity in 1 year, you can choose to put 40% of the total value into the annuity's bond fund. You might want 40% into a stock mutual fund and maybe 20% into the money market account. Meanwhile, another purchaser of the exact same annuity could allocate his or her value in a completely different way. So you could have very different returns from someone who essentially has the same annuity. If I pause, I have to bring the chat up and check it. Otherwise, it'll cover my screen. So in the case of this variable annuity, you're able to choose how you want to invest your premiums, and then you select those funds based on your own risk tolerance. And what I said before actually is this means that investors who purchase the same variable annuity will have different rates of return depending upon the decisions that you've made about the investments. And we do recommend, and like I said, I'm going to repeat this multiple times, please discuss this with a financial advisor. If you're not confident making these decisions on your own, then definitely speak to a professional. So how do you pay premiums into the annuity fund? Well, single premium annuities are contracts where you pay the entire premium upfront in one lump sum. An advantage of a single premium annuity is that the full amount of your premium begins earning interest from day one. So some people have a lump sum to start this single premium annuity. And a lot of people have these flexible premium annuities. So this allows you to pay however much you want, when you want, within certain limits. So most flexible premiums will require a certain minimum premium payment, at least in the early years. So in some cases, the companies may place a cap on the maximum amount you can contribute and may require a minimum. So it's flexible, but there may be some constraints on that flexibility. The time when you're making these premium payments, this is called the accumulation period. This is the period of time when contributions are being made to the annuity and the value of the annuity account is building. Annuitization is the process of converting your annuity into a series of periodic payments. When the contract owner is ready to begin receiving payments, the insurer computes a payment based on several factors, such as the value of the contract, the projected longevity of the beneficiary. So that projected longevity of the beneficiary means how long they expect you to live, the beneficiary, and the type of payout chosen. So each annuitized payment includes part of the principal, and then the rest is made up of the earnings. One second. Make sure I didn't miss anything. So withdrawals. A lump sum withdrawal is generally allowed. So if you want to take money out, it's generally allowed, but it can be a costly move. So this is just a warning. You need to review your plan's rules about these withdrawals, and you may be required to pay taxes, penalties, and a surrender charge. And I'm going to cover that in depth in a couple more slides. So when does the annuity start paying you? So you've paid into this annuity. When does it start paying you? An immediate annuity begins the payout phase within a very short period of time. So an immediate annuity is going to start either from 1 to 13 months, for example. So between 1 to 13 months is usually an immediate annuity. For this reason, immediate annuities are typically paid for in a single premium, since the entire premium amount must accumulate before the payout phase begins. The purpose of an immediate annuity typically is to convert a large sum of cash into a steady stream of income for an extended period of time. So again, the purpose of an immediate annuity, converting a large sum of cash into a stream of income over time. How does the annuity pay you? So, sorry, I skipped immediate annuities and then deferred annuities. So deferred annuities begin the payout phase sometime after purchase. The time when the payout begins is dependent on the contract. So that means it's going to change. I couldn't answer that question for you because it's going to be based on the contract. The majority of annuities sold today are deferred annuities. So for the most part, people aren't coming in with that lump sum, but sometimes people are. I mean, they have a rollover or an inheritance or a settlement or something like that. But most of them are these deferred annuities. Instead of receiving a payout, you also have the option of rolling the amount over into another annuity or extending your existing annuity. Most deferred annuities include an accumulation period. That's that period of time when contributions are being made into the annuity and the value of the annuity account is building. So these deferred annuities, for the most part, you're contributing over time and your annuity amount is building over time. So there's a couple other things to know. Life only, okay, that's going to be an option possibly. And what does that mean? So life only, the company makes payments for as long as the recipient lives. The payment amount is largely determined by life expectancy. So the longer the recipient is expected to live, the smaller the payment amount is going to be. There's no guarantee that the total amount invested will be returned. But on the other hand, the recipient is guaranteed income for the remainder of his or her lifetime. So in this situation, life only, the beneficiary is life only. And so if somebody were to pass away earlier than expected, there's no guarantee that the total amount invested will be returned, but they are guaranteed to continue to get payments as long as they live. If the recipient lives a long time, more than the amount paid in the annuity could be received. For a fixed period annuity, the recipient receives a payment for a specific number of years. Payments after the recipient's death may be made to a designated beneficiary. So if it's 20 years and the beneficiary passes away after 10, then it's likely that the next 10 years will be paid out to their designated beneficiary. One second. So life with periods certain. In this situation, payments are made during the lifetime of the recipient with a guaranteed minimum payment. So this means if the recipient dies without receiving the minimum payment, a balance is paid to the named beneficiary. And then you have joint and survivor life. And in this situation, the company pays the annuitant or survivor for as long as either is alive. So joint and survivor life, the company pays the annuitant or the survivor for as long as either is alive. And if you're just coming into this without a lot of knowledge or experience with annuities, I know that this is a lot kind of coming at you all at once. And I do recommend shooting me an email so I can send you a copy of this PowerPoint tomorrow. And like I said earlier, there will be a copy of this recording on our webpage within the next couple days. So again, still talking about how the annuity pays you. Not all annuities offer these options, and some may offer others. Be sure to read the actual annuity contract, and in addition, brochures the insurance producer may give you to learn about the features of the annuity and how the payout is structured. So make sure you read your contract and make sure that you read the information that you're given. And that can be overwhelming, absolutely. And so if you feel like, you need to sit down with somebody who is a professional, or just somebody that who knows more about this than you do, that might be a good idea as well. So what administrative and fees and charges does the annuity have, and is there a surrender fee? Ask those questions as well. Most annuities will charge you a substantial penalty for a withdrawal from the accumulated value during the surrender period. So this penalty is called the surrender charge, and it's typically highest in the early years of the annuity. And it quite likely may be reduced or even eliminated over time. And all that's going to be written out in the contract and possibly in the brochures, in the materials that you are given by the insurance company. So surrender charges commonly range from 5 to 15% of the amount withdrawn. Okay, so they're going to tack on maybe 5%, maybe 15% to the amount that you want to withdraw. High surrender charges can easily erase any earnings that you've gained. These penalties are the primary reason an annuity is generally preferred as a long-term investment. And so we encourage you to think about an annuity as a long-term investment, not a short-term investment, because if you do need that money quickly, it might cost you. Therefore, they might be unsuitable for individuals who have immediate needs to access their funds. Discuss the tax consequences of early withdrawal with the tax advisor, and ask your financial advisor if the annuity contract includes a death benefit and a surrender value. Make sure you clearly understand the taxes that you have to pay on any benefits that you receive. So it's important to ask your financial advisor questions about what happens to your annuity contract if you die. So understand, is this life only? What is this contract? Make sure that you understand those terms that were presented earlier, and then, what do I have in this contract? So ask the financial advisor about what would happen to your annuity contract if you die, or if you decide to purchase another annuity, because maybe that will make sense to you in the future. If you're considering replacing one annuity for another, carefully compare your old product with the new one. So ask questions. Are the death benefits the same? What about the surrender value? Is there a surrender charge to get out of the old annuity? So are you going to get charged a substantial amount of money just to get out of what you already have? Are the annual fees and new surrender charges higher for the new product? And will there be a new surrender charge period for the new product? So am I starting over with this new annuity and dealing with those higher, older surrender charges again? Definitely ask those questions if you're contemplating moving from one annuity to another. That's definitely not a decision to be taken lightly at all. So some shopping tips. Consider consulting an accountant, financial advisor, trusted family member, or friend. I know I've said it a lot, but if you purchase an annuity that you don't fully understand, you could have surprises down the road that you don't want. You don't want surprises down the road when it comes to something as important as an annuity. It's like purchasing a house. I mean, it is the kind of financial decision that you need to take seriously and take your time with. And you need to work with somebody who's going to allow you to take your time with that. So if you feel rushed, if you feel pressured in this situation, you probably are not dealing with the right person. shop around and compare the guaranteed interest rate. So that minimum, that guaranteed interest rate, maybe you can do better somewhere else. Maybe you can do substantially better somewhere else. So shop around. Don't just don't just shop with one insurance company. Compare the fees, compare the surrender charges, compare their projected return, potentially compare the projected return with other types of investments. So you might not have decided for sure that an annuity makes sense for you, and that's great. Think about other investments, talk to a financial advisor, and see if something other than an annuity might make sense for you. Even with an annuity's tax advantages, other investments might provide an equal or better return while providing less restrictive access to your money. So just something to be aware of. Make sure the time frame for payment is right for your needs. So remember that annuities are not a short-term investment. They frequently take at least several years to become profitable. Income in an annuity is not taxed until it is paid out. So talk to a tax advisor before buying an annuity within a retirement plan, such as a 401k or IRA. And so that's sort of, that's a possibility to purchase an annuity within a retirement plan. Talk to a tax advisor about the consequences of that if that's something that you are interested in. Know how much risk you are willing to take on. And so I talked a little bit about active investing, how much of an active investor you are. Well, also, how much of a risk taker are you? How comfortable are you with risk? It's important to decide the level of risk you're willing to accept before you purchase an annuity. And some people who have a decent amount of experience with investing, are somewhat active with their 401k or their IRA, you might have a real sense of how much risk you are willing to take. Somebody with a little bit less experience with that might have to dig a little bit deeper and figure out what they're comfortable with, or you may want to talk to a financial planner who will explain to you, well, maybe at your age, this is the amount of risk that you should take on. So weigh that against the risk posed by the type of annuity you're considering. So if it's a more higher risk annuity and you know that you're a low risk kind of gal, maybe that's not a good match. Fixed annuities guarantee a minimum rate of return, as we've mentioned, and variable annuities have the potential to earn significantly more, but you can also lose money. Verify that the producer and the insurer are licensed. So if you're wondering if this insurance agent / broker that you're dealing with is licensed to do business in Maryland, you can contact us. Insurance producers, they must have a Maryland insurance license to sell annuities in Maryland. In addition, the insurance producers who sell variable annuities must have a federal securities license. So with the variable annuities, there's an additional license. Obviously, checking to see if they're licensed won't avoid every potential problem, but it's a good step toward ensuring that an annuity is legitimate and that it meets the state's minimum requirements. You can verify the licensing status for your agent or your broker or the insurance company itself by calling the numbers here. I'm going to read them just in case there is any vision impaired people. You can contact us at 410-468-2000, or you can contact us at 1-800-492-6116. Consider the insurer's financial condition. So annuities are a long-term investment. A company that's in solid financial shape is more likely to be around when it's time for you to start collecting on your investment. And you can learn about an insurer's financial rating from independent rating organizations. Take your time. It's probably not a good idea to purchase an investment as complex as an annuity on, say, your first visit. The first time you sit down with this insurance agent, you should probably walk away and give it some thought for sure. Take all the time you need to make that decision. If you feel you're being pressured to make a decision quickly, you might want to go elsewhere. That kind of high pressure sales doesn't belong in a transaction like this. And again, it's a good idea to ask a trusted family member or friend to accompany you when you meet with the insurance producer, if you're not someone with a lot of confidence in this situation. Maryland has a mandatory free look period. So all annuities sold in Maryland, they come with a minimum of a 10-day free look period. During this period, you can cancel the contract for any reason. If you have a fixed annuity and you cancel within the 10-day period, you may be entitled to a full refund. If you have a variable annuity, you may not receive a refund for any loss in the investment. So if it has lost money over the past 10 days. Use this time to reread the contract and make sure it meets your financial needs. If the annuity doesn't offer a free look period, be careful. If you've already purchased an annuity and it does not have a free look period, file a complaint with us. File a complaint with the Maryland Insurance Administration. Be wary of any annuities that are sold door to door or over the telephone. Somebody just shows up at your door, somebody cold calls you about an annuity. Most of these situations are legitimate, but these sales techniques can lend themselves to fraud operations. So if you do buy an annuity in this manner, you need to obtain the insurance company's physical address and make sure that you have a way to contact that company or that producer. If it just so happens that this door-to-door situation or this phone call is just what you're looking for, I'm not going to say that can't happen. But if it does, contact us, get their physical address, and just go through the steps of verifying that this is legitimate, because you do not want to be handing over your money to an illegitimate source thinking that you're purchasing an annuity. The Maryland Insurance Administration does publish information on annuities. Earlier in the presentation, you saw the cover of a consumer guide to annuities. I will say a lot of the information that I presented to you is in that consumer guide to annuities and a little bit more. We have some information on the Maryland Life and Health Insurance Guarantee Corporation as well. So that's what might be guaranteeing the money that you're putting into the annuity. And we have a consumer advisory on trading your annuity for a new one. You can contact us, the Maryland Insurance Administration, at 1-800-492-6116 or 410-468-2000. And you can also visit our website and are encouraged to do so. These documents are all downloadable on our website, but you can also contact us and ask for them to be mailed out to you. We are more than happy to do that as well. And our website is www.insurance.maryland.gov. And any questions, my email is here. It's also in the chat. I didn't receive any questions so far. It looks like there's 10 participants here. But if you do have any questions, go ahead and put them in the chat. I'll hang out a few minutes to see if anyone adds any questions in there. And, feel free to just leave or log yourself out, if you don't have any questions or if you're done. Thanks a lot. I hope that this was informative. I do encourage you to send me an email asking for the PowerPoint itself. Check the website for the recording in the future. And you can always contact me at any point with any questions as well. So thanks so much. I'll hang out for a few minutes and see if there's any questions. Thanks. Oh, for those of you that are still hanging around, I have a question for you. Was this 7 p.m. time too late? Did 7 p.m. work okay? I got a little pushback about it being a little bit too late. I just wasn't sure. If anyone has any feedback, you can unmute or type it into the chat. Thanks, Jackie. Yeah, I thought 7 might work for some people, you know, as kind of an after dinner time. Thanks for that feedback, Wanda. All right. Well, thank you, everyone. And again, this will be recorded and posted on our website. And I hope to see you at events, seminars, and presentations by us in the future. Thanks so much.